what is going on with gold and silver. Now today we'll take a look at why these prices may be spiking. I'll look at a couple of ETFs to see how they stack up against the broader market. Now historically there have been different reasons for precious metals to rally. Now in the case of gold, not just jewelry, but also medicine, circuitry, other technologies, computers, medicine. But I think it's pretty fair to say the booming demand for products right now at this juncture is not what's going on. That's not what's driving prices at this point. Silver also has some industrial applications. It's a good electrical conductor. So there's some uses there. Now the application you're probably most familiar with, gold and silver, is as a defensive play when it comes to investing. And I'm not going to get into the pros and cons right now. I'll talk about that a little bit at the end of the video. But a lot of the rally that you see in precious metals has a lot to do with the psychological impact of traders and investors wanting some kind of hedge when they perceive the stock market is going to perform poorly, a safe haven, so to speak. And right now we have expectations for lower interest rates, more stimulus from governments, rising debt, expectations for more COVID, a slower economy. I think that V-shape rebound that a lot of the more optimistic people were predicting, that's not going to happen. So going to the perceived safety of gold and silver seems like the thing to do. Okay, so let's jump in right now. Let's look at the chart for the iShares Gold ETF, tickers IAU. That's right in front of me. It's up 19.24% year to date. I've got a monthly chart here. You can see that nice rally. I put this on a monthly for you because what I want you to see is we're back here to about 2011 levels, just shy of that. And you see it rallied back in 2011 because there was August 2011, because there was a scare regarding S&P downgrading U.S. debt. That scare kind of went away the following month, September 2011, and you see it reverse lower again, never really regained those highs until just right now, just this month, as a matter of fact. So that's what's going on there. And I want to also show you the Silver Trust ETF, which we have right here, SLV. Now this is at about a 4-year high, going back to about August of 2016. You do see over there. And, similar thing. You see that silver is perceived as a flight to safety in this case. Really had some big rallies, up 19.17% back in May. So this has kind of been on this trajectory ever since we had the COVID lockdowns, and that became something to be concerned about with regard to the economic forecast, quite frankly, and just all the other bad news that accompanies that. Now I want to show you a chart here that compares here's the gold ETF that we looked at a minute ago, IAU. Here's the silver, SLV. Here's the S&P 500. And you can see their recent performance in this comparison chart. And I don't always use the S&P as a benchmark. It's not broad enough. It's just big American stocks. But I want to show you how the gold and silver asset classes fit into your diversification strategy. And you do see here silver up about 7.9% year to date. This is a yearly chart, by the way, so you can see kind of everything going along, just kind of normal year. And then boom, we had March, we had COVID. And you see gold took off to the tune that we were just talking about a minute ago, 19% higher, silver about 8% higher. Then you have the S&P 500 right here, up 1% for the year. So we're kind of back to where we were at the end of 2019 right now with the S&P 500, okay? Now, most of these gold and silver stocks that are traded, many of them are Canadian or foreign. They're small companies. You often hear them called junior miners. So they're not tracked in the S&P 500. But there are a couple, and let me show you one right here. NEM is the ticker. And I'm going to go to a weekly chart here, just give you a little better indication of what's happening right now. This is Newmont Mining. And over here, you do see it's had some good earnings growth recently, some good sales acceleration. That's why I like these charts. This is MarketSmith. There are other charting programs that are better for certain things, but MarketSmith does show you good indication of earnings and sales growth. Over here, the estimates are pretty good for 2020 and 2021, regardless. Now, Newmont, I was curious about why are these earnings estimates looking so good? And Newmont sells to a number of industries. Chemicals, electronics are two big growth areas. So apparently their customer base is still buying. And this is a big U.S.-based company. And you do see they produce gold in the U.S., Australia, Canada, and many other countries around the world. 51.5 billion market cap. So what do you do with all this information? Do you run out, do you buy Newmont Mining? Do you go buy the gold ETF we just looked at here, the IAU? Do you buy the silver ETF? Here's my take on this. And the question of precious metals is one that clients have asked me about many, many times over the years. And here's how I approach it. If you want to take a flyer on a risk asset, and really any asset you're investing in, you're taking a risk, right? So if you already have an equity portfolio, you're already holding precious metals, especially if you have global stocks, small caps, anything beyond the S&P 500. So if you are already properly diversified, you are, aren't you, right? If you're not, let me know. I'll help you with that. If you are properly diversified, you have this exposure already. But say you're worried about the stock market. You want to take a flyer on precious metals to get extra exposure to these because you believe they will continue to rise at a faster rate than other asset classes and rise while others are tanking, even more importantly. Then what you can do is carve out a small piece of your portfolio. Do not bet your entire retirement on this. Not even a big chunk. You know, I read somewhere this morning actually about a guy who had 15 million invested in Boeing stock. And then all the problems happened with the 737 MAX and Boeing tanked. And it really, really damaged his portfolio value. That's maybe kind of more money than sense in that case. But you know what? A downturn in the broader market, as we've seen, could happen at any time. It could happen again. Wouldn't surprise me if it did at this point. It could also happen with any individual stock, any individual asset classes. So do not overweight your portfolio with something you're making a bet on. In other words, don't put 50% of your portfolio into gold or silver. If you want to take a flyer, carve out a little bit. Don't do anything to the detriment of the plan that has already determined what the appropriate outcome is that you need so your money doesn't outlast you in retirement. I hope you found this helpful today. Please don't forget to subscribe to the video, hit the bell icon so you get an alert when a new video is published. And before I go, I have a new website coming really soon along with some investing courses and ways you can work with me. So stick around, and I will be showing you that very soon. Thanks again. See you soon.